Hi, how are you doing? Today I'd like to talk about one of the biggest fears and sources of anxiety for most of founders and CEOs and chief executives. And namely, this is cash flow, financial stability. Do we have enough money to cover the costs in the coming weeks or days? Do we have money to pay for the office rental? Do we have money to pay the wages? Do we have money to pay all the invoices that we should pay when they become due? How come is this becoming the biggest fear and the biggest anxiety source? And when I talk about this with entrepreneurs and CEOs, I realize that most of them do not plan cash flow, do not plan cash flow projections ahead of time, which means they kind of have some information in their minds, what type of invoices they expect to get paid from the clients. They more or less know how much cost they need to cover every month and what are the other costs of goods sold that they provide to their customers, but they do not really have real numbers, true numbers in front of them. So the fear typically is linked with the unknown. They know this is a delicate topic. Finance is delicate. It's hard to be, financially stable because they just know that basically most of the times the cash state, the cash position is not pretty high. They do not have the comfort. They feel like they struggle for so many weeks, months, sometimes even years with this. So they just are afraid of this topic, but they do not measure it and they do not plan it. And here I'd like to share with you the tool that I really liked using so that I know the truth. I know what's ahead of me. I know what to expect. Because from my experience, if you know the truth and you know what to expect, you're not afraid more than you should be. You're not afraid of the unknown, but rather you can manage what you know is coming. Whether it is bad news or good news, you know what they are and you can manage the situation. And the sooner you know, the better it is. I have prepared an example of cash flow projection document, something that I like to use in the past. Let me walk you through what we see here on the screen, and maybe you would like to incorporate the same for you. So first, this is time, okay? This is timeline. Each of these lines, they mark a week. So every week is represented here with a space on this timeline. Here we have cash state, okay? We have zero level, we can be above zero, whatever currency you use, euros, dollars, whatever, or you can be below zero, right? And basically this line also marks today, this line, okay? So we are here today. This blue line is my cash state, cash balance projected for each of the weeks that we discuss here. And I have the names of the months and or the numbers of the weeks here. However you would like to describe the timeline, you can put it here. So you can see with the blue line that my cash expectation evolves. So what changes the state of my cash? How do I plan the cash? And let's agree on one thing. Here we take into account all the costs and revenues that we have committed to or our clients have committed to. So if they have accepted the invoice, here it goes. If we know we have some costs to cover because we have signed the employment contract, we have signed the rental contract, we have signed the assignment or purchase order for some goods or services, well, this is your cost that you have committed to, right? And if your customers have committed to buy something for you, they have ordered the product, they have accepted your cost and issued the purchase order to you, this is the revenue that you can account for, okay? So we do not have here in the future anything that we plan to sell, okay? For now, we just look at what we know we have already sold and committed to which costs and how it affects our cash flow. So each week has two lines. The green one represents all the income that I expect to get from my clients on that week. How do I know it's on that week? Well, because I know what's the payment due date for each of the invoices. So I can project when the money will come. And of course, if you know Well, a client always pays 2 weeks later. Well, for these invoices linked to this client, I would use the date 2 weeks later so that you have the most true image of the situation as you can have. And you also have the red line that goes down. This is your cost, something that you plan to pay because it becomes due on that week, right? If this is end of the month, probably like here, you can see lots of costs coming at that week. Probably this is wages or some other costs that typically become due at the end of the month. And now, of course, the balance of those two, what you expect to get and what you have to pay, what you expect to pay, this indicates how our cash flow will move, right? If income is smaller than the outflow of money, so what you will pay, then of course the result will be the cash will drop by the end of that week. And then you might have a week like this one where the income, green line, is much higher than the red one. So of course the cash will go up, right? And what I like to look at here is with all of these assumptions, of course, we only have certain amount of invoices that we expect to get paid in future, depending on your payment terms. But of course, later in the future, we know the costs of running the business, the fixed costs that we have, but we don't know much about income because we haven't sold it yet, right? So of course, the expected cash flow will hit zero at one point of time if we do not sell anything more from today till that day, right? For me, always the question was, so when is this point in time? How far ahead are we before we hit zero with our cash? And of course, then we go below, which is pretty frustrating. Also here, we have very interesting situation. On that week, we expect to have positive cash flow, whatever it is, 100,000 euro or whatever. But you can see that on that week, this cash state will result from the enormous cost that we plan to pay, but also quite an important income, right? And you can see that without this income, well, probably would already be well below zero, right? So this is also an interesting moment, important moment for you. When you plan your cash flow, you want to ensure this money comes in on that time, right? So we'll immediately talk to your CFO or account managers so that they ensure this income really comes to our account, because without that, we'll surely fall below zero, which is a dangerous situation. You surely want to avoid this. But basically, when you look at the cash projection for each of the weeks, you know how much time do you have to produce new revenues or manage costs, I mean, lower the costs before the situation becomes dangerous. Of course, this topic we could discuss about it for several hours, and we could really build a webinar, and probably I will do one day. But today I just wanted to invite you, use a tool like this so that you become less stressed and much more informed about what's coming. And when you know the reality, you'll start managing this rather than being afraid of this. I hope that helps. Thank you so much and see you soon. Bye-bye.